Now that it's September, all eyes are on the Federal Reserve, or the Fed, with the overwhelming expectation that they'll cut the federal funds rate at their upcoming meeting this September 17th and 18th. This will be driven primarily by recent signs that inflation is cooling and the job market is slowing down. Chief economist at Moody's Analytics, Mark Zandi, said, "They're ready to cut just as long as we don't get an inflation surprise between now and September, which we won't." But what does this mean for the overall housing market and, more importantly, for you as a potential home buyer or seller? Why a federal funds rate cut matters. The federal funds rate is one of the key factors that influences mortgage rates. Things like the economy, geopolitical uncertainty also have an impact. When the Fed cuts the federal funds rate, it signals what's happening in the broader economy, and mortgage rates tend to respond. While a single rate cut might not lead to a dramatic drop in mortgage rates, it could contribute to the gradual decline that we're already seeing. As Mike Frattoni, chief economist at the Mortgage Bankers Association, the MBA, points out that once the Fed kicks off a rate-cutting cycle, we do expect that mortgage rates will move somewhat lower. Any upcoming federal funds rate cut likely won't be a one-time event. Lawrence Yun, chief economist at the National Association of Realtors, or NAR, says, generally the rate-cutting cycle is not a one and done. 6 to 8 rounds of rate cuts all through 2025 look likely. The projected impact on mortgage rates. An ongoing gradual decline in mortgage rates is what is anticipated in the industry by sources such as Fannie Mae, MBA, NAR, and Wells Fargo through 2025. So with recent improvements in inflation and signs of a cooling job market, a federal funds rate cut is likely to lead to a moderate decline in mortgage rates. Here are 2 big reasons why that's good news for both buyers and sellers. First, it helps alleviate the lock-in effect. For current homeowners, lower mortgage rates could help ease the lock-in effect. That's where people feel stuck with their current home because today's rates are higher than what they locked in when they bought. So if the fear of losing your low-rate mortgage and facing higher costs has kept you out of the market, a slight reduction in rate could make selling a bit more attractive again. However, this isn't expected to bring a flood of sellers to the market, as many homeowners may still be cautious about giving up their existing mortgage rates. Secondly, it should boost buyer activity. For potential homebuyers, any drop in mortgage rates will provide a more inviting housing market. Lower mortgage rates can reduce the overall cost of home ownership, making it more feasible for you if you've been waiting to make a move. What should you do? While a federal funds rate cut is not expected to lead to drastically lower mortgage rates, it will likely contribute to the gradual decrease that's already happening. And while the anticipated rate cut represents a positive shift for the future of the housing market, it's important to consider your options right now. Jacob Channel, senior economist at LendingTree, sums it up well. Timing the market is basically impossible. If you're always waiting for the perfect market conditions, you're going to be waiting forever. Buy now only if it's a good idea for you. The bottom line, the expected federal funds rate cut driven by improving inflation and slower job growth is likely to have a positive, though gradual, impact on mortgage rates. That could help unlock opportunities for you, but also make sure you weigh the option of waiting with the amount of appreciation that is happening in the area you're looking to buy. All your waiting could be in vain. When you're ready, let's connect. That way you'll be prepared to take action when the time is right for you. I'm Marnie Kels, Community Market Leader and Colorado Licensed Realtor since 2001. As always, if you find value in these videos, please like and subscribe, and thanks again for watching.